Alright, guys, Jeff here back again with another video. So today we're going to be talking a little bit more about inflation expectation. So as you all know that we are going to be getting our inflation report, aka the CPI report, 2 weeks from now, which is what we'll be getting for March. Okay, so of course I intend to actually make this slightly a shorter video because I do not want to make a long form content for my weekly videos. So I'll try to keep it under 10 minutes for you guys. All right, so over here you can see this is the February data. Okay, so overall we've actually been seeing this sort of up and down increment and decrement of the inflation. So this inflation and disinflation. Okay, so in June and October, we did receive exceptionally high inflation month over month, hitting 0.9% month over month. Okay, so in February, which is last month, we actually saw 0.8% increment. Okay, so what does that actually imply? Because of course in this 0.8% increment we are also taking into consideration of oil prices having changed, food prices having a few increment as well. But something that's actually there's going to be a huge change between February and March data is because the whole Ukraine Russia invasion military action happening, it actually happened on the 24th of February, and because February had 28 days, it means that only 4 days of the whole inflationary data was actually being reflected over in the February report. Okay, so everything else that we're actually having right now in our current cycle, we can easily expect that it's going to be very high price as well. All right, so over here I'm going to be opening up crude oil prices. Okay, so right now crude oil, okay, it has already fallen dramatically. Right now it's already down to about less than $100. Okay, it's great that we're looking at below $100. So there is a good chance that we might be seeing a little bit lesser inflationary pressure on oil prices. But nevertheless, we're still going to be seeing a huge increment nevertheless. Because do understand that we're still taking the whole United States CPI as the current balance sheet that we're actually looking at. Okay, so for the United States, 1 gallon of oil is about $3. Right now, it's about $3 or so. At its peak, it was about $3.50 in normal states. In California, you're looking at about $6 a gallon. Okay, so if we're looking at Missouri, we're looking at Mississippi, all those you're looking at maybe about $3, maybe $2.80 or so. Okay, prices of oil are starting to really come back down a little bit, but of course we have other negative catalysts for us to actually look into as well. Because let's be honest, if we also have to take into consideration for how Russia is intending to be trading oil for rubles only, then that's going to be the first bearish catalyst, because that means that for people who do want to get into Russian crude, you would have to get into rubles first. And of course, with Saudi Arabia and UAE, they're also looking into possibly changing the value of oil over to yuan or renminbi instead of them actually going with the US dollar that they actually went through with Nick Dixon back in 1970s, where they actually did the entire deal back then. So, of course, right now we do not exactly know what would be more of the weakness catalyst around oil prices in general, but for CPI expectation as a whole, personally, I do think that we might finally see anything above 1%. But of course, I do believe that the consensus on the street, they are not expecting anything on at 1%. Let me just open up the consensus for the prices. Okay, well, right now, the Wall Street have not actually came out with their consensus. I'll actually go and check on it maybe a week before the CPI release actually comes out. But I think that's going to be something very, very important for us to really look in. Personally, my own thinking, I think oil prices is going to be pushing prices up. I think food prices is going to have one of the biggest rise, which would cause a lot of inflation pressure alongside with everything else. I think that's going to be one of the biggest scare in the market, because I don't think that we are going to suddenly see a beat in inflation either. And even if we do see a beat in inflation, for example, if we're estimating 1.1% month over month, even if we do get 0.9%, let's not discredit the fact that it is still 0.9%. Okay, it's still 0.9%. It's not as if we're getting a 0.5% out of nowhere. So I do think that it is very, very possible for us to really see a very, very high level of inflation pressure coming in for the month of March. But of course, for this current video, I'm not just going to be talking about the inflation expectation for March alone. Of course, I will give a little bit of my own sentiments on what will happen for April and May as well. Because for April and May, I do see a little bit of a shift in terms of the pricing for a lot of the items, such as oil prices. Of course, I do understand that a lot of people are saying that oil prices will stay consistent about the $100 mark to maybe $110 mark or so. That might be the new stable, because with Russia oil being boycotted out of the entire economy by a lot of people not actually liking unethical oil, there is a good chance that we are actually taking away the supply from oil side of things. So of course, that's going to be a concern for all of us as well. But of course, I do think that food prices is definitely going to be going up, and I think food shortages in the long run is going to start being a very buzzwordy kind of thing. Okay, you're going to be hearing a lot of food shortages terms, a lot of articles on food shortages, and you can be sure to hear more about food shortages in all my daily news as well. Because of course, right now it's starting to become a real issue. Okay, it's not just about money; it's now about supply. Okay, rising costs is not really the issue, because now people are actually unable to get the food, and that's going to cause a whole nother set of problems for us in the long run. But anyway, that's all I have for the inflation expectation for March. Of course, I will be going through more of it in my daily news as we actually go along with it. Of course, I would probably be changing my stance if there are any new information that actually surface. But anyway, thank you guys so much for watching, and I'll see you guys next time.